okay, this is wait for it. And I'm going to be covering zones and how they're important, how you're going to use them. And I'll be updating the zones before session, after session, during session, on the ES, the YM, and the NQ. And I can do the GC, the CL, and RTY if there's enough people that want them. So if you are interested, comment below, or just come to Patreon and join, and just let me know. And that way I'll know that you're serious, and then I'll start updating them there. So I'm on a 60-minute chart. That's where you want to start, and I'm going to show you how I do it, and then I'll keep them up to date. And so your indecision candles here in a row, like 2 right there in a row, is perfect. So what I'm going to do is I'm going to take the smaller of the 2, and I'm going to put a region over them like this. And that's going to be, and I'm going to go and edit it. Like there's a third one there, so it's pretty spot on here, but I'll edit it when I go to a smaller time frame where it's supposed to be. And then I'll do another one down here. There's only one indecision, but it's the only indecision at the low, and it's literally at the low right there. And then, so basically what you're trying to do is you're trying to encompass the highs and lows of your price action, right? And then you're probably going to need something in between as well. And so as you scroll across price action, you're looking for things of interest, of like rejection, and in this area right here. And this kind of makes like a good. I have indicators, and I get that long wick there, but I've got price action stopping here several times. Plus I've got that wick to the high there in between it, and that's going to be right in the middle of my price action. So I'm going to do that there. Now I'm going to scroll over, and I might need to give myself more days here, data series. So let's go 20 days. Okay, and then I'm going to scroll over. We're just looking for, again, indecision or things of interest. Multiple, wicks stopping at the same area, bodies. Like this is a really good place right here. Maybe. And then, so I'll check that out when I go to a smaller time frame. And then there's some indecision right here, and there's another one right there, and that's probably going to cover me for my current price action. I'll see if there's something lower in the last 20 days. Oops, I don't know why I did that, sorry. Like that, and like that. Alright, I'm back. Sorry. And so, going further down, it does get to a low right here, right at the end of this 20 days. So from the bottom of that wick to the bottom of this one here. Alright, and now I'm going to put, I like the size of this one here. So I'm going to copy that, and then I'm going to drag this down. Oops, it's locked in. Alright, and then I'm going to move this to be more in the middle here. And then I'm going to move it just to hit that wick of that guy right there. Alright. The other one's saying it should be like a little bit lower, like right there. But that's fine. Alright, now I'm going to go to the 15. And there. Alright, and I don't want them so big that it's like you'll never get out of them, right? Because you'll just have a million price action in this area. And then you won't know where you need to trade. So what I'm going to look for is where's your average price action at, and I'm going to try to find the indecision inside that. And so at the low here, I've got sideways indecision right here, plus I got a little doji right there. So I'm thinking that I'm probably good to have this right here. And so let me measure this. See how big this is. I'm going to try to make them all the same size. So that's 77. So I might want to make it like 75. And let's see. Yeah, maybe I'll bring it down like 2. There. And so that should be good. And so then what I'll do is I'll copy this, paste, and then I'll move that. Let's change the color because I do bands throughout the day as well, and I don't want them to overlap. So, solid, like neutral, fall, or like orange works good. But let's just go. These are gonna be non-Liberty zones. Liberty is the club I used to be at, and so it's gonna be. I learned to make them there, and I'm the one that updated them for last year. So maybe this will be a good color. Let's see. I don't even see it. So maybe not. I have it. Oh, because I have it like that. Let me do 55. I'm okay with that. Alright, let's do it that way. And so then we'll make this a template, save as default, and yes. And let's lock it. Now template, save as default. Yes. Apply. Okay. And go away. Alright, so now I'm going to drop this, I'm going to drop a line at the low here. And then help with my lag here. Maybe this should go higher. Oops. And then copy, paste. Why is it spazzing out? Let me click on this one. Get rid of that. No, not that. This. I'll just turn that off. Alright. So there. Then this will go up here. Let's say something like that. That's perfect. Okay. We'll copy and paste this. I know there's one in between these areas here. So move. This up. I might actually move this down. Actually, there was a higher part here. Move this up to there, like this. And then get rid of that. Put that up there. And so what you're doing is you're basically trying to line up where the stopping point is on the previous price action. And then it makes it a stronger stopping point to in the future, because basically it's where big institution has dumped a lot of shares, and so you're basically trying to capitalize on that area as a reverse point. I'm doing really bad at talking while I'm doing this, sorry. But let's see, that works right there. And you don't want them so close, like see how these are super close, I don't like that. So I'm gonna push this down, and remember this is a 15, oh, I just totally messed up the spacing on that. Hold on, maybe bring it back up here. Alright, so what you want is, it's a 15-minute candle here that we're looking at, so if when I go to a smaller time frame, it's going to be a lot of price action on each one of these candles, and they're going to be bouncing off these areas. And so this is good because it's giving it support here, and it's poking up and failing and then dumping back through. And then it's going to hit this one down here and bounce back up. And so it is kind of like a little bit of an art form. Like me showing you is not jeopardizing me, or with you being able to just go and do this overnight. Like it's a lot. It's more of like a visual thing, and it's something you got to get used to. So it is what it is. But I mean, if you watched it enough and you practiced it, then yeah, you can do it on your own, and then kudos to you. Then you can do it for me, and I'll pay you to do it. Excuse me, I snorted. And so there's an indecision here on the 15-minute, and it's the high end of this move right here. So it'd be a good place to put one. And typically you only have 4, but I might do a couple more just so I don't have to keep adjusting them throughout the day. And so there's another high-end move right here that stops, and I might push this down a little bit to really encapsulate that push. I don't want them so close that it's like suffocating. And again, you have to remember that this is a 15-minute chart, so you know. And so I'll get rid of this one, and then I'll duplicate that, drag it down. That's probably a really good spot for it. And then to the upside here, let's see. Let's see if we have anything higher. Don't know if we get much higher than this here. Okay, there it is. And look at it, it's perfect. See how far back I am? And so I probably want another, yeah, there you go. I want another one right here. And so what we'll do is we'll duplicate this guy, grab it, bring it to the high. We'll have the wicks kind of pushing in, the body sticking out. That'll give it enough space there. I don't know. Yeah, I don't want to be too tight on that. So like right there. And then I'll do another one above that. Let's see. And so we'll do this. Bring this to the high of that. We'll get rid of this. Probably want this like that. or right like that. It pokes out the high here, but it ends up reversing back in and dumping. Like that, and it uses this as resistance going across. It's more likely that it's going to stop here in the future at the low end of this than it would at the high end, just because it put more candles at the low end. So there's more contracts traded here, so there's going to be more buyers and sellers sitting here waiting, versus at the higher part. And that should do it. So then I'll just make sure these are locked, and then I'll copy these down. I'll put them in the Discord. And lock. There. And there you go. And now you have your zones. So now we'll look for a trade. Oh, does my stomach? Wow. All right. So now that we got them set, and I'll bring it back to live. Now back. So it just made it back into the zone here, and it put a wick into the bottom here. So once it gets back in, I want it to come back and find support on the bottom, or get above the 89 and hit the top, and then come down and find support on the 89. But if it can find support on the bottom here and not dump, then look at taking a long. But if it continues to push down here and pulls back and rejects off of it, then I'll short it. And so let's say I got my opposing wicks. I'm coming back to break even. This is my inside candle right here. So this is actually a good spot. It just wicked into right there. So let's see how this next candle holds on a pullback. And breaking lower. Down to testing that low right there. Let's see if it pushes back up. So it's either going to reject off the zone right here, or it's going to push into it, and it's going to end up being like a breakout. Oof, all the way to the top there. Still need to come down and find support right here. So this is basically a cup and handle. So I'm looking for a handle right here. And it's going to wick to the high here. It's probably going to end up finding support on top of this and forego going, putting support down here. But let's see. All right, there you go. Here's your handle right there. I'm jumping in right here. I'm putting my stop or my take profit up here at the high of the zone. And I'm going to adjust my stop to just underneath this candle there and let my stops run natural here from here. And it's going to have a little bit of a problem getting through this 89 probably. It's going to probably pull back more than I want. So probably going to adjust my other stop now that through that other wick right there. I'm going to put my other stop right there. And then we'll see how it plays out. It just closed low right there. So probably wouldn't surprise me if it dumped down right there and got my stops, but I would be taking a small profit either way, so it wouldn't really matter. But that's the beauty of the zone there, is that it gave me enough room to get in, get my stops off without getting, obliterated right off the bat. And so maybe it stays bullish here and it keeps going up, and I still have I've got one target to go. And because I've got one target left, I'm going to move this up. see how far I can get it away before it comes and gets me. And my stop is at the 89, which I needed to be a little bit lower in case it comes down and wicks it. Because once it gets above, it likes to put support on top of it. And if it's very bullish, then it doesn't have to come all the way down. So that might be it right there. And then I can start to move this back up. I'm going to try to control this last stop here. I don't know why it's so aggressive. Because it's the first one. And it took my second one first for some reason. So I'm going to try to leave it right here where the 200 is and see if this will break out and go long. If it breaks out and goes long, then I've got a pretty good trade going here. And I mean, it's at 405 right now. And so now I can try to move this up to underneath the low of this consolidation of these candles here. That'll guarantee me at least 350, 325 maybe. And then as this is going up here, we're breaking out above the zone. Now it likes to try to go to the next zone. So I'm just going to move this to the top of the next zone here. And as it keeps moving away, then I'm going to go ahead and manage this. And see, I got that white diamond there. I'm due a pullback on this, and so it's probably going to be more than what I want right here. And so if this closes below the low of that candle right there and doesn't retake it to the high here, so see that green candle right there? I'm just going to go ahead and put this right there. Because if it starts to come down from here, it's going to come down multiple red candles from here. And I don't want to be in it. And so I'm at 670 on one contract, and I just got stopped out there. So there you go. That's how a zone works. That's the beauty of a zone, is that it gives you that kind of confidence that when it comes back, it dipped out. And so let's recap on that. All right. So our price action came in and failed to break out the high here. It was underneath the 89, and it pushed back underneath, and then it came and went lower on the 89 as well. And so then you can see like it failing to break the 89 again, and the 89 coming down, so down trending. But then if you look at your push to the downside here, it failed to break to the low, right? And so then I had this inside candle here, so this is part of my other indicators, and this is what gives me confidence that this is probably going to go up, is because all these other dots and diamonds and everything, these are all different steps of a pattern that I've coded in, and so it lets me know where it's at without me having to sit there and break down the price action. And then once I see this inside candle here with these opposing arrows right here, I know that this is setting up to reverse, and that it's going to break out here, and then it's going to come back and retest that right there. All right, and so it goes up, it comes back, it retests right here. Then I got that doji showing that it's failing to go lower. And then I get a strong push to the upside, and it breaks this high here, and this time it makes traction above the 89, but not much traction. And so whenever you get just a green candle that stops just shy of the high of the 89, a lot of times it's going to whiplash the 89 a lot, so you got to be careful of that. All right, and so then our trade comes in when it breaks over the 89 and comes back and retests that, right? Well, technically our trade started when it broke over the 89, because you get opposing candles here again. I think, yeah, so our trade started here when it hit the bottom of the zone. That's right. And so I entered it because it showed progress to the 89 for the first time, right? So that's my second confluence that I was looking for. Weakness here, or third, I guess, on the retest here, and then strength here on the retest to the upside here, showing progress over the 89. Then it comes back and checks the bottom of the zone and holds it to the pretty much to the tick there, on those two candles right there. And then so I get in on the after it pulls back on this candle here, it holds it, and it retakes it to the high. And so I might have been a little slow on entry there, so it might have been almost right at the 89 when I got in. But then you see that it never pulled back, and so how I get in on my trades is based on this indicator that I'm using. I got the opposing arrows here telling me that it's getting ready to reverse again, and I got another inside candle right here. It's not as much of an inside candle as the other one was, but it's exactly the same. And if I scroll back here, you'll see right there, it's exactly the same, but it's at a higher angle, right? And so I can draw if I was to draw an angle up encompassing that candle, you can see now the path that I was looking at taking, and then how or why I would take it, because it's how bullish it is, right? And so again, we're showing progress on the 89 here, more so than we did last time, and weakness to the downside here, more so than we did last time, and then pull back to the bottom of the zone, which I know is going to be a strong place to bounce off of, right? And so then boom, we bounce off of it, we retest this candle, and then retake it to the high here, and that's where my entry is. And then I've got my opposing wick showing me that it's reversing as well here, and it's also an inside candle as well, so I've got the trifecta there as well. And then it breaks out, this candle breaks out past the high of this wick here, which makes it bullish, but because it's the first show of strength on a breakout, you're going to have a pullback as well. So here's the pullback, and then it breaks out again to the high, but closes back close to the low, to that wick right there, so therefore there's another pullback. And then because it didn't close below this right here, the next candle's green, and then that's your permission candle. The white diamond is the permission candle to run there. And now the white diamond just broke over the high of the previous pullback over here for the first time. And so now you're going to have this string of candles running right here going up, because that was the permission candle was on this candle, so it was able to go without having to do any red candles pulling back. And so then that's what all this is. The yellow diamond means that it's at a high compared to the last 17 candles, and the blue diamonds means that it's at a low. The yellow arrow is saying that it broke over the low of this red candle right here on a push down of this first move. The blue one is saying that it broke over the low of this push down here, and that it's getting ready to turn and go long here. So anyways, and so then it gets up here and it gets really small candles, and so your first sign that's going to reverse is after you have expanding green candles like this going up, and then it goes smaller, and then the next candle goes bigger again. That's usually a sign of exhaustion. And so then you have this red pullback, and then another big green candle, and then another bigger red candle, and then it starts to dump down, right? And that's your move. Like that's everything. And so as you saw, that was a what, $690 move. So well worth it. That's Zones. Thanks for watching. If you are interested in subscribing, you can go to. All right, so come to our Discord, join, get the zones. You have different options there. If you don't want to pay $50 for the month, you can get individually. You can get them $20 a pop. You can also check out our mentorship, and we have Savvy Sean, who does. He's great with options, and he updates his news every day. So definitely go there. If you do dabble in both, he's very dedicated to updating the news on his options. You can also go into I have ebooks for sale, and you can subscribe monthly, so you don't have to pay for them individually. That's a pretty good buy there, and that's going to be where all my setups are going to be there. So if you want to understand how to read the price action in order to get in on some of these setups, I'm going to pick a different setup each time, and then break it down on all the fundamentals that you would need to know in order to understand what I'm saying, so that you can see the move. And so I'll have like a series of videos probably throughout each week that kind of shows you how that move works. So definitely check that out. And I'll also have my indicators for sale up there at some point. And I mean, if nothing else, just jump in there and say hi. Link is on the screen there, so definitely go there and check it out and let me know what you think. And hopefully we'll see you soon.